100% believe Bitcoin will hit $1 million one day. One of the things that has changed from 2021 to today is the volatility of Bitcoin has been dropping. And so if volatility is dropping as more people adopt the asset, it just extends the timeline. Bitcoin is very similar in that there's only going to be 21 million ever in circulation. So it's a finite asset similar to that land. And so as more people show up and say, hey, I want Bitcoin, the price of the asset keeps going up. And so if it's just a bunch of individuals, as you, me, and a bunch of our friends showing up, okay, it goes up a little bit because there's some people who want it. But when central banks, when sovereign wealth funds, when Fidelity, BlackRock, JP Morgan, right, those types of organizations start showing up, they got a lot more money than you and I. And so having them show up is like having, the 200 people show up and try to buy the 4 plots of land. And so that's what kind of drives the price up. As long as they keep devaluing the dollar and increasing the national debt, Bitcoin will hit $1 million at some point.
According to well-known investor and entrepreneur Anthony Pompliano, he thinks that Bitcoin is a revolutionary force that is changing global banking and is much more than just a digital money. Anthony explains in a recent interview why the present state of the economy makes Bitcoin's journey to $1 million a reality rather than a pipe fantasy. With the introduction of Bitcoin ETFs, institutions are flooding the market with capital, paving the way for widespread adoption. But this isn't happening in a vacuum. Legal obstacles, environmental issues, and decentralization discussions further complicate Bitcoin's rise. For Anthony, Bitcoin represents the ultimate hedge against inflation, government overreach, and fiat instability, empowering individuals with financial sovereignty like never before. Anthony's observations show how Bitcoin has completely changed how people view money, freedom, and power, rather than just increasing popularity. Watch till the end as we explore Anthony's audacious predictions on the financial future. Don't forget to like, subscribe, and hit the notification bell for more daily videos. Let's get started.
But do you still believe that Bitcoin will hit $1 million?
Yeah, definitely not by 2026, but I 100% believe Bitcoin will hit $1 million one day. One of the things that has changed from 2021 to today is the volatility of Bitcoin has been dropping. And so if volatility is dropping as more people adopt the asset, it just extends the timeline. So, kind of the classic, you got to change your mind when you get new information. And seeing that volatility drop through the last bull market and through this last bear market has extended that timeline. It's really hard to predict timelines, but as long as they keep devaluing the dollar and increasing the national debt, Bitcoin will hit $1 million at some point. The second thing that I think is really important is we now have a lot of clarity that financial institutions are going to adopt this. ETF launches have happened since March of 21 to today. We see central banks, literally right now, the Central Bank of Argentina is mining Bitcoin in an art exhibit in their building. You can call it an art exhibit, but still a central bank is mining Bitcoin. And so we've seen other countries start to adopt it, etc. So like the biggest pools of capital are now starting to adopt Bitcoin, which means that there's still quite a bit of runway to go. And so $1 million is not hard to predict if it's given an infinite timeline, right? It's what is the timeline is the hardest part of making a prediction around price. Well, think of it, maybe not as Bitcoin, but think of it as land. So if I had a neighborhood and there was 10 plots of land and let's say 6 of them were already owned by somebody. So there's 4 plots of land available. And if only one person shows up to try to buy a plot of land, well, there's more land available than people who want it. And so you have a lot of pricing power. You can kind of negotiate because you're like, look, you don't have that many people that want this. I'm going to pay what I want to pay. But if instead those 4 plots of land, there's 200 people that show up and say, I want one of those 4 plots of land, the owners of the land keep jacking the price up to respond to the demand. Bitcoin is very similar in that there's only going to be 21 million ever in circulation. So it's a finite asset similar to that land. And so as more people show up and say, hey, I want Bitcoin, the price of the asset keeps going up. And so if it's just a bunch of individuals, as you, me, and a bunch of our friends showing up, okay, it goes up a little bit because there's some people who want it. But when central banks, when sovereign wealth funds, when Fidelity, BlackRock, JP Morgan, right, those types of organizations start showing up, they got a lot more money than you and I. And so having them show up is like having, the 200 people show up and try to buy the 4 plots of land. And so that's what kind of drives the price up. And then why would they show up to buy the plots of land or buy the Bitcoin? A huge reason is because historically they have stored value, right? Their economic value they've worked hard for in dollars. But now what we are seeing is that inflation is higher than it historically has been. And because we are raising the national debt so quickly, which is the money that America either creates, borrows, etc., the only way out is to inflate away the debt. And basically what that means is they're going to keep printing money. And they're going to, very similar to on your house, when you borrow a mortgage, it's a set price. So if you borrow $100,000 to buy a house that's worth, let's say $150,000, you put down $50,000, you borrowed $100,000. You just owe back $100,000 plus interest. But as the dollar gets devalued, you're paying back that mortgage with dollars in the future that are worth less. And so that's the arbitrage. That's how you create wealth in real estate. That's why people have so much of their net worth tied up in their home, is because they have a hard asset and the dollar is devaluing against it. Same thing with the national debt. The national debt is a nominal number, but they devalue the dollar in order to pay back, right? Or to kind of inflate away that debt. And so if you're holding dollars, you're on the losing end. And so that's why you see so many good investors getting into real estate, stocks, Bitcoin, commodities, etc. They want to get out of the dollar. So it's kind of one of the paradoxes of the world, right? Is everyone wants money, but the wealthy actually understand it is economic value that you want, not the currency. The currency actually is guaranteed to lose value. And so in a weird way, again, a paradox of your life is that the thing you've been taught is safe, cash, sophisticated people know is actually one of the riskiest things you can hold, because it's one of the only things in your portfolio that's guaranteed to lose value. And so you've got to get out of dollars and get into these financial assets. That's why investors win and savers lose.
Anthony Pompliano analyzes Bitcoin's trajectory toward a possible $1 million price, highlighting the cryptocurrency's fixed supply and expanding user base as major factors. Although he points out that Bitcoin's price volatility has dropped since 2021, which would lengthen the time it takes to hit this milestone, its ability to withstand growing U.S. debt and currency devaluation is still unmatched. Anthony draws attention to the growing importance of institutional interest as triggers driving the price growth of Bitcoin, including the endorsement of Bitcoin ETFs and investments from sovereign wealth funds. He emphasizes that Bitcoin's long-term viability depends on its decentralized architecture and structural advantages rather than any political figure or party. According to Anthony, Bitcoin acts as a global financial alarm system, reacting to major events like geopolitical conflicts and economic crises. While political changes may cause short-term price swings, the larger trajectory is defined by mounting national debt, inflation, and global instability. Let's return to Anthony's observations and determine the implications for Bitcoin's future.
The 20-year impact, there's no difference between either one of them, because Bitcoin is going to be successful regardless of who's in the White House. There can be some short-term impact, right? Obviously, if one administration is abrasive and the other embraces it, that can be a, kind of a difference for a year or two. But I think that if we look at the last 4 years, there's a lot of people in the industry that would argue that the current kind of Biden-Harris administration had been abrasive, right? The current regulatory environment, et cetera. I would counter that and say, even if you believe that, which I think is objectively people would say, Coinbase still went public. The Bitcoin ETF got approved. The Ether ETF got approved. ETF options got approved, right? So there has been progress in the face of the abrasiveness. And so I think what people are excited about in a Trump administration, given what he has kind of positioned himself as, is imagine what would happen if he embraces it, right? Like imagine how good it would be. I think Harris recognizes, hey, this is a pretty big constituency. There's a lot of people here that own these assets. They've donated a lot of money. And so maybe I need to listen to the people. And so her camp is kind of saying, hey, let's reset relationships, right, with the industry. Regardless of whether you believe one of them, don't believe one of them or anything, I think what I find solace in is Bitcoin is going to be successful regardless of who is the president, because it is not controlled by anyone. It's decentralized. It's global. It's backed by the strongest computer network in the world. It's got all these advantages to it. And so there can be short-term volatility, but over a long run, I don't think that people who are trying to buy or sell, the asset based on who the president is are going to be any better off than people who just say, hey, look, I'm going to evaluate Bitcoin for Bitcoin and not worry about the political stuff. I think the first thing is that Bitcoin is an alarm system. And so what we have seen historically is that when Bitcoin goes up, something's happening in the world. And so it's kind of like an alarm clock. It's going off. It's saying, hey, pay attention right now. Something's happening. And so we've seen it go up in times of geopolitical conflict. We've seen it go off in times of a kind of banking crisis. We've seen it go off in terms of the global pandemic, right? So it's kind of this alarm system. I do believe that Bitcoin right now is trading kind of neck and neck, or related or correlated to Trump's odds of winning. Because I think there's a lot of people who say Trump is going to be better for Bitcoin. I'm going to buy if I think that he's going to win. Bitcoin would sell off for a day or two, kind of, oh, she won. and it'll go right back. And so again, I go back to kind of this idea of like under either administration, there may be some short-term volatility, but I think Bitcoin's going to do what Bitcoin does regardless. And you can see this because Bitcoin went up under Republicans and it went up under Democrats, right? It was created during Obama's tenure and it ended up going through multiple presidents and it's continued to do its thing. And so as I see Bitcoin's price go up, I always say to myself, everyone is distracted by politics because that is the easiest narrative. But at the same time that Bitcoin has been going up hand in hand with Trump's odds, guess what else they're doing? They're printing a lot of money. The national debt has seen almost $500 billion in the month of October added. It's a $35.8 trillion national debt. This is an explosion of debt being added. And so is it trading up because of Trump's odds or is it trading up because of the national debt? Regardless of what your answer is, the long-term structural trend is Bitcoin goes up. Very volatile, it'll draw down, it'll do all these things, but there's this Fidelity study that the people who died or lost their password had the best performance because they didn't touch it, right? The guy who bought the brownstones in Brooklyn, right? He bought it. He can't sell it really quick, right? So he can't wake up one day and be like, oh my God, sell. There's a process. It's hard. It's illiquid, all that kind of stuff. And so I do think people who just have a very long-term horizon, they're the ones who have the advantage. And even though it has all this volatility, imagine if I came to you in November of 2022 and said, oh my God, Bitcoin's at 17K, right? And you're like, oh, sell. And then I come back to you now, I'm like, oh my God, Bitcoin's at 70,000, right? And then I come back to you tomorrow, I'm like, it's at 65, right? You go crazy. So just having a long-term view, I think, is kind of the thing that mitigates all the noise.
Anthony Pompliano emphasizes that the success of Bitcoin in the long run is unaffected by the actions of the president, while he concedes that short-term repercussions could occur from political differences, such as one administration being more supportive of Bitcoin than another. He underlines that Bitcoin's decentralized nature, worldwide presence, and structural features assure its resilience over time. Anthony notes that despite the Biden-Harris administration's seeming abrasive regulatory climate, there was still a lot of progress made. Coinbase went public, Bitcoin ETFs were authorized, and the industry experienced other noteworthy developments. He emphasizes the possibility of additional expansion should a more pro-Bitcoin government, such as Trump's, adopt the cryptocurrency. But he also points out that eventually political changes won't have much of an impact on Bitcoin's trajectory. Bitcoin responds to catastrophes like pandemics, economic instability, and geopolitical conflicts by serving as a worldwide warning system. Some contend that events winning the election are responsible for its price fluctuations, whereas Anthony maintains that the real forces are more significant structural elements like inflation and the growing national debt. He stresses the value of having a long-term view and warns against being influenced by short-term volatility. Anthony emphasizes the need of patience and conviction with examples such as the Fidelity study, which indicates that the highest Bitcoin return comes from those who don't sell, and historical precedents such as investors keeping illiquid assets. Thank you for watching, and please don't forget to like, subscribe for daily videos. Happy investing!